What's going on, guys? Tony Ivanov here with another video lesson, and today we're going to talk about penny stocks and how I traded two penny stocks today, where I was first down 200 bucks and then on my second trade I made 320 bucks. So all in all, I'm up 120 bucks on the day. Not a big one by any means. I'm still working on just finding my grounds in this volatile market. Some of you know that the market took a pretty big hit yesterday when Trump imposed those tariffs on steel and aluminum. So that was very random and people weren't really expecting it. So that, it caused some turmoil in the market. So we'll see how that goes. We'll see if those play out. He still has 1 week to cancel it. Hopefully he does, because it's not really good for the economy. But we can talk about that later on. So two trades, one on AVGR and then one on TVIX. So I'm going to talk about those trades in a second. But first, if you don't know, every single day I give away $25 and it goes to a random commenter from the previous video lesson. I'm going to announce the winner at the end of this video. So stay tuned if you want to see who wins, and stay tuned if you want to know how to enter into that drawing. So first up, let's talk about AVGR. So first things first is that, it's a Friday. So Fridays are one of the hardest days to trade, just because there's usually less volume and less volatility than normal. Usually Fridays are a lot slower. They don't have as much volume. There's not that many news releases on Fridays because companies like to wait until either Monday to release their news. So usually it's just a slower day, and we knew that when I was making my pre-market watch list with my chat room and my live stream, that it looked like it was going to be a pretty slow day. The markets were gapped down 1% already during pre-market, so that was not looking good whatsoever. So I didn't really have anything to watch on my watch list except for ZSAN, which had a massive squeeze during pre-market. It squeezed up from, the 5s to almost $10, and I was sleeping during this, so I missed out on that move. I really need to work on waking up at like 5 a.m. in the morning so I can, take advantage of these when these arise. But, it happens. Early bird gets the worm on some of these plays. So if you got in on this, congratulations. Also, I had a very nice bounce right before the market opened, which you could have used this top right here as an entry point. Simply, this is a common buy signal. Whenever you have a big downtrend and you have some bouncing, well, one, we're making higher lows on this play. So if we just draw this line right there to signify those higher lows, so it kind of makes a flat top wedge. You just draw a flat top on these two. Actually, even better, you can just do a regular wedge. So you connect these bounces. Once the price action breaks over the top line, that's a buy signal. So you buy on that line and you aim for around 10%, and you could have made that very easily on this trade. So very nice trade on that one. I didn't trade it in the morning just because it was so volatile. It didn't have any pattern. I was watching this later on in the day for a potential gigantic bull flag. I was watching it on the 5-minute because it was midday. Whenever I trade during midday, I resort to the 5-minute because it just cleans up a lot of the noise that results from just less volume and less liquidity in the market. So if you want to trade midday or afternoon, I recommend you look at using the 5-minute instead. All the same chart patterns, no matter what time frame you use, it doesn't matter. All the same chart patterns work. All the candlestick patterns work, so don't worry about that. But I was watching for this this bull flag here. But one thing I was noticing, and one thing that I realized as I was watching this, was that it only tested the top 2 times after the first spike, but it was just riding along the bottom constantly. And in this area, I was just getting less and less confident with it. And I had a feeling that it was going to break down, and sure enough, it did. It broke down and trended a lot lower. So that one was done for. So going on to AVGR. This one popped up on my scanner. I had a low float, low price, so it looked good to me. But on this trade, honestly, I kind of forced it. It wasn't the pattern that I usually trade, and I was just kind of trading it just because there's nothing else going on in the market now, and I was hoping that this one would have some legs and pick up. So I first bought this at 9:38 a.m. So right around on this candle right here, I bought it. I bought 1,000 shares at $1.34, and then it popped up, hit a dollar, or yeah, no, it was right at the top of this candle. It popped up, and then next minute we popped up, tapped $1.39, $1.40. Then we just quickly dropped right back down, and it was getting very choppy here. So it kept making lower lows on the 1 minute candle, and just level 2 wasn't looking that strong. So I eventually exited this trade at 9:40 a.m. So 2 minutes later, I sold my 1,000 shares at 132. So I took a loss of like 1 cent per share. After commissions, that was like a $26 loss, nothing big whatsoever. And my thesis was, okay, if we can get back over 140, I'll look to get back in, because it would complete this U-shape and it should squeeze higher. So, you know, sure enough, we retested 140. So this time, and this was one of my mistakes on this trade, is that because the first trade was a scratch and I lost 26 bucks, the second trade I did with more size, and that was a bad idea, and that was purely because of emotions, because I was like, okay, well, since I was wrong last time, I can't be wrong this time, so let's use more money just to make more money, and that was a bad idea. Even if this trade worked out and spiked up 20 cents, I shouldn't have bought twice as many shares as it was the first time, because I was already wrong one time on this trade. It doesn't make sense to use more size if you've already been wrong once, because you just introduce more risk and you can lose more money, and that's unfortunately what happened to me. So I bought 2,000 shares at $1.39. I got executed, and then it popped up to 145. I wanted at least 10 to 15 cents per share on this trade, so I didn't take those profits. And then it bound resistance at 145. It quickly dropped back down, and I was too hesitant to sell, partly because I had so much money invested into this stock, because I'm using a cash account. So whatever money I use in a trade, I can't use that money for another 2 days. So when I tie up, you know, 2,600 bucks in one trade, I don't really want to sell so soon, because then I just lose that opportunity cost that I could have made with that 2,600 bucks. Hope that makes sense. So it quickly dropped right back down, hit a low of $1.29. I was like, okay, I have to get out of this. And then when it popped up to $1.34, I got out 1,000 shares, and then I got out another 1,000 shares at $1.31. So that was a big loss for me, and that's how I turned my day into a $200 loss. So that was, you know, unfortunate. And at that point, I reached my max loss. I didn't want to trade anything else in the morning, because I was already at 200 bucks. I wanted just to, you know, just take the morning off. I stepped away from the market. I went to the gym, took a shower, and I came back at around 2 p.m. Let me see. Yeah, 2 p.m. 2:22. I came back to the market, and I was watching TVIX and SPY, because they were doing their little dance there. TVIX, I was watching TVIX because it if you don't know, TVIX is the inverse of the SPY. So because of the Trump tariff news, I was watching SPY, watching the green to red area to look for a potential crack. And on TVIX, I noticed this double bottom here. So we bottomed out here on this dip at 9.19. Let me use the 5 minute, because I was using the 5 minute during this trade. So I was watching this dip down here to 9.19, and then we popped up a second time, and then we dipped back down, and then I got in at 9.25 with 500 shares. I got in at 9.25, and then what I was looking for was, you can see this trend line here holding down this stock. There's this one trend line that connects this point, and then you know, this one wasn't there, but then there's a second one that is the second point, and then this top right here. So I drew this line, and my you know, my goal was, okay, so let's see if we can pop up and break that trend line and then squeeze up towards the previous close, which is right here just over the top of this candle, so just around $9.92. So this one was actually a much longer hold than I usually do. This trade ended up being a 50-minute long trade, which is longer than I ever like to hold hold a stock for, but I was willing to hold this one longer because one, it's not a low float penny stock, so it's not nearly as much risk, and two, with the overall market moves, you have to give it time to work out. So I was willing to hold on to this for a tiny bit longer. Granted, it didn't reach my risk, and the whole time my risk level was 918, the break over this low of day. So we never once broke down below that, so I had no reason to sell. We popped up and we hit a high of 979, no, actually 983, and the SPY was having huge signs of strength at that point. It was just looking like it was just going to keep running back up after that dip. Let me just get this situated. So hopefully you guys will be able to see this. But on the SPY, I was watching this dip right here. Okay, this dip right here was this spike on TVIX, because like I said, they're inverses. They're the opposite. TVIX is an ETN, and it does the opposite of what SPY, the S&P 500, does. So all in this level, one, we had the trend line support. Two, we had the 50 moving average, and it just looked like it wasn't going to break down because all these long lower wicks indicate that the price dropped down, but buyers brought it back up to support. So it had 20 minutes straight of just really strong support. And once I saw that, I was like, okay, it could go higher, but I'm already up a good amount, so I'm just gonna get out. Close out my trade at $9.75, and I ended up being green, 120 bucks on the day. So I turned my $200 loss into being up 120. So that was a very awesome trade. You know, not in the fact that it's big money, because it's not, but in the fact that I was able to spot a pattern and then turn my red day into a green day. Now, if you're a new trader, I would not recommend that you try to turn your red day into a green day, because you're more likely to fall into the trap of emotional trading. If you noticed earlier, I said I reached my max loss of 200 bucks in the morning, so I stopped trading in the morning. Because let's say that I took a trade after AVGR, I would have been a lot more emotional and not so willing to cut a loss fast, because I wouldn't want to, you know, have another losing trade. So that could have blown up into an even bigger loss. So I stepped away from the market, I took a break, and came back with a fresh mind and spotted a trade that I knew that had the odds on my side. If you're a new trader, I would recommend that you always have a max loss. Now, say your max loss is 100 bucks, meaning once you reach a $100 loss on the day, just stop trading. Just turn off your platform and stop looking at charts, because even though you may miss an opportunity to make money, at least you will not introduce an opportunity to lose money. And the most important thing with people with small accounts is to preserve your capital, because you know, if you lose, so say you have an account that's $1,000, and then for some reason you put all that into one stock, and then you don't cut your loss, and somehow you're down 500 bucks, you're down 50%. Well, now you only have 500 bucks, and if you want to get back to that $1,000, now you have to make 100%. You have to double your money, and that's a lot harder to do than it is to lose half your money. So I hope that makes sense. Hope you can understand that concept. But that's why it's so important for people with small account to cut your losses very fast and focus on the best trades and implement a max loss. The thing with trading is that it doesn't have a timeout button. Let's say that you know, you play a sport and you sprain your knee by playing too hard. Well, now you can't play again until your knee is healed. With trading, there isn't that you know, reset button. There's none of that timeout stuff. You can take a huge loss and then 2 seconds later get into another trade, and that's one of the most dangerous things about stock trading. And that's something that you have to learn to implement your own rules, so you don't fall into that trap of, you know, taking a loss and then just getting right back into it and taking another even bigger loss. So those are my thoughts for today, guys. Tomorrow I'm going to be talking about Bitcoin, because I did enter into my Bitcoin position. I'll just bring up the chart real fast just so you guys have a heads up. We did break the downtrend. So once we broke that downtrend, I started my position at $1,900, and now it's up to $1,136. So it looks like it's going to be going up. It has broken the trend line of resistance, which is the major resistance line that we've seen since December. So next stop we have to break over 1,200, and then go from there. So hope you guys enjoyed that lesson. Next up, we're gonna announce who won the $25. So if you want to win this, or if you want a chance to win this $25, all you have to do is leave a like, leave a subscription, leave a comment down below for a chance to enter into the raffle. Here's Christos. He says, "Hey man, keep it up." Thank you very much, Christos. I appreciate it. Make sure you send me a YouTube message with your PayPal email address, and I'll send over that $25 to you as soon as I get your information. So that's the video, guys. Hope you guys enjoyed this free information. If you did, like I said, leave a like, leave a comment, leave a subscription, and I'll see you guys tomorrow.